What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. Okay, so let's make a full breakdown of the situation that we currently have on GBPUSD. Now, why do I want to speak about this pair? Because it is very near to providing to us a good trading opportunity and it has a very interesting price action at the moment, both from a technical and in order flow perspective. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a nice impulse to the upside. Now, generally speaking, after the creation of an impulse, what you expect is for the market to provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the monthly impulse. So by taking our Fibonacci from the low to the high of this impulse, what we can see is that we have a 0.32 lining up exactly at this area that we do expect the market to go and test before a possible continuation to the upside. So at the moment on the monthly situation is quite clear. We do expect the market to correct at least to this area. Going down on the weekly time frame, what do we have? Now here on the weekly, price action is quite clear as well. We have a market which has just provided a nice impulse and currently the market started as well the correction. Now generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has just corrected exactly to the 0.618 of the Fibonacci taken on the weekly impulse. Now, why is this quite important? Because the 0.618 is a very strong support area and is also the golden ratio, so the Fibonacci level to which you expect the market to correct most of the times before the market starts the continuations to the upside in the case of an impulse and a correction. So here in the weekly, everything is quite clear and we do expect the market to provide the continuation to the upside. Going down on the daily time frame, what do we have? Now here on the daily, I had spoken about the GBPUSD quite a few times in the past. I spoke about it when the market was here and I made a full breakdown explaining all the reasons for which, from this area, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this M pattern and from here I made another breakdown explaining all the reasons for which we wanted to see the market create this move to the upside. And again, that is exactly what the market did. Then after this impulse and correction from here, I made another breakdown explaining why we wanted to see the market start a move to the upside, and the market did start the move, however it failed to break above the previous high, and from there the market started the move to the downside, creating this M pattern. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. You find everything linked below. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. But at the moment, what do we have and how we can be looking to capitalize on the next potential move? Now, at the moment here on the daily, as we were saying, we have a market which has just provided this M pattern. And generally speaking, after the creation of an M pattern, what you expect is for the market to create a move to the upside to go and complete the M pattern at the previous support, which is now term resistance. So here on the daily, we definitely expect the market to provide a nice move to the upside to complete the pattern at this previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last report, long positions dropped from 68K down to 55K. However, at the same time, also shorts are getting dropped from 37K to 26K. So overall on the pound, what is happening is that net positions are decreasing, but during this decrease of the net positioning, instead of adding shorts, hedge funds are closing shorts. In fact, we can see how in the last reports actually hedge funds have been consistently closing shorts. We can see 4K shorts close here, another 1K, another 800, another 8K, another 1.6K, and another 700 closed with the last report. So if all these shorts are getting closed, why are net positions decreasing and not increasing? Well, it's quite clear. The reason for which all these shorts are getting closed and net positions are getting decreased is because longs are getting closed even more. That is why we're still seeing a shift to the negative side, meaning that hedge funds are not really interested in this move to the downside because otherwise they would be adding shorts, not closing shorts. Since they're closing shorts, it means that we can expect the move to the upside to start again quite soon. So there is definitely the possibility for this M pattern to complete at the neckline. So how we will be approaching this potential short-term longing opportunity on this pair? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding GBPUSD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is the previous support, now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.